So banks have really taken a hit in 2023, and I think provide a really interesting investing offer to an investor, which is that I think they're going to rise in value. And I think if we look at 12 to 24 months down the road, we're going to see stock prices for banks go up. And all while you wait for that, you get paid a dividend. So for me, it's a pretty attractive proposition. And I'm very interested in banks. It's a sector that I'm really moving capital into. And I wanted to analyze Midland States Bank. It's a stock that I've owned for some time, and I continue to buy shares. I like to analyze any company that I own twice a quarter, and I just did my analysis on Midland States Bank. I wanted to update my analysis and share that with you here on YouTube. Do me a big favor and like my video and subscribe to my channel. I'd really appreciate that. I'll continue to make videos and hopefully you enjoy them. Now, let me go over my process that I use for analyzing companies and then go over the analysis for Midland States Bank. So buying into a bank is pretty much you decide to become part owner in that bank, and you have to really understand, are they a good bank, a bad bank? Do you want to be in banking, industry? And that's the first question I have to ask myself is, do I really like this bank, and do I want to be an investor in banks? Second question is, do I think this bank's being operated well? Do I think the management team is doing a very good job? Is their book value growing? That's very important for a bank. And am I getting a discount on this stock? And based on the answers to those questions, I buy, hold, or sell. So the banking industry in 2023, it saw a huge scare about 4 or 5 months ago, and it was led by Silicon Valley Bank. And what happened was Silicon Valley Bank has big depositors in the Silicon Valley. They get these Silicon Valley startups, they get big sums of investment in their companies, and they take those sums and they were taking them to Silicon Valley Bank. And Silicon Valley Bank was trying to earn money on that cash that was laying around their bank. So they put it in long-term bonds. Now, if you followed rates just went up incredibly fast. And what that did is it really devalued the bonds that this bank had bought. Now, the bank really would have been solvent if you would have given them enough time, but word got out and they started running on the bank. And it's no longer that, 100,000 people show up at your bank and try to withdraw their money. They just go online and start, withdrawing the money very quickly. So that's what happened to Silicon Valley Bank. Overall, the bank was bought. The assets were bought by somebody else and they were taken over. And a couple of other banks got in trouble. But that just scared the whole market away from banks. Now, interest rates are no longer going to go up as fast as they did before. In fact, we're expecting they're going to stay firm for a little while, and then they may even start going down here in 2024. We'll see. But I think the whole scare of banks is over. And what's left is, I believe, highly discounted banks. Now, one of the greatest investors in the history of mankind, Warren Buffett, said, be fearful when others are greedy and be greedy when others are fearful. And that's what I'm trying to be here is I'm trying to be wise and see that, hey, banks are not accurately being priced. In fact, they're discounted very favorably. Favorably meaning I think I could buy banks now and I'm going to wake up in a year and 2 years and see that investment be worth 50% more. And meanwhile, they're going to pay me a nice dividend. So that's what I'm trying to capitalize on here. The banking industry hasn't been doing too hot as of late. It's down almost 10%. Again, if I study the fundamentals and I see a very high quality company or bank and it's worth investing and it keeps getting discounted, that's good news. That means that I'm getting a further discount on this investment. So I am even that much more interested. I'm buying across several banks. One of them is this bank, but I'm also buying into Citi and I'm also buying into US Bank. And I'm buying into Ally Financial, which is a combination of consumer finance and they have an online bank. Midland States is really interesting to study their last 5 years. If you look at 2018, 2019, I'm going to call those the normal years because it's before COVID. The PE ratios, they're at like above 12. That would be expected. They're profitable. They're growing. Very good to see. You could see that their earnings per share had been growing. Then you got COVID. Obviously, COVID really impacted the world, and it really took things out of whack. And ever since then, In 21, its PE was, less than 7. Interesting. They were profitable, making money, they were growing. In 22, look at their growth in earnings per share. Just excellent growth. And the stock did rise, by the way, in that era, but their PE ratio is down to 6, and now it's down to 5. Now, this 5, I'm kind of associating to that bank scare that I commented on before, and that's part of it. Their book value keeps growing, which is good. That's very important. And then their dividend yield, 5.5% dividend. And buying into Midland now, when interest rates are so high, it's kind of a wise move for me, which is, hey, I got a discounted bank. I'm going to be paying 5.5% on my money while I wait for this bank to be correctly priced by the market. I believe that Midland States Bank is discounted by 44%, and I value it using book value and earnings per share. If you want to see the complete analysis, you can see another video on my channel that I go into the financials and really go step by step. But basically, I believe that each share is really worth about $31 per share, but the stock market's selling shares right now at $21.74. So it provides a really nice discount. So as mentioned, I really like this bank, and I'm very bullish, optimistic that the banking industry is really going to bounce back. And I think that the management team here has really had a level head, really operate the bank well. They're growing their loan portfolio, doing a lot of good things. The book value continues to grow, and a really attractive discount on stock. So I'm going to keep buying shares of Midland States Bank. Looking at where the stock has traded over the last 5 years, it was once trading above where I value the stock, which is $31 per share, but it's come down. It was trading closer to really its true fair value, but it really dropped in the COVID era, and then it went up closer to its fair value, and again it's dropped. And again, this whole scare that we saw in 2023, Silicon Valley Bank, I kind of explained that. None of that really, happened at Midland States Bank. They didn't buy a bunch of bonds. They didn't get in trouble. None of that. Their business, their book of business is very different than Silicon Valley Bank. So I really like showcasing, some of these smaller banks, smaller companies, and Midland States Bank is one of those, banks that isn't going to receive a ton of, attention from analysts. But I found it, a few years ago, actually about 4 years ago, and have been tracking it ever since. And I'm glad that I found it. I think it's going to be an investment that's going to pay off over time. And it's a video that I wanted to make. Hope you found it interesting. I'd love to hear comments from you on where you think banking is, if it's going to bounce back, and what you think about small banks as well. Love to hear from you. Do me a big favor and like my video and subscribe to my channel. That'd be a big help. And with that, let me wish you good luck investing in 2023.